All right, welcome to another deep dive. This time, we're taking a closer look at Apar Industries. And we've got a whole bunch of stuff to go through. Annual reports, earnings call transcripts, sustainability reports, you name it, we got it.
Yeah, it's like a full access pass to see how this multinational conglomerate specializing in, well, they do a lot, but especially electrical and telecommunications infrastructure, we're going to see how it all works.
Exactly. And by the time we're done with this deep dive, you'll have a much better idea if it's, worth considering as an investment. So let's dive right in.
Sounds good.
All right, let's kick things off with their fundamentals. And right away, I'm seeing some impressive numbers, especially when it comes to, their return on equity, their return on capital employed, consistently above that 15% benchmark. And then on top of that, Apar's boasting about those double-digit EBITDA margins. Sounds pretty promising, right?
Yeah, definitely. A consistent ROE and ROCE above 15%, that's a good sign. It means they're using your investment effectively to make a profit.
Right.
But we can't just stop there. Remember, Apar operates across 7 different business segments.
Wow, okay.
If you actually take a look at their FY24 consolidated segment analysis, you'll see some differences in revenue growth and EBITDA margins, depending on the segment.
So it's not all sunshine and roses, huh?
Yeah, sometimes the devil's in the details.
Gotcha. So a holistic view is key here. And speaking of margins, you flagged this massive 130% year-over-year increase in EBITDA for FY23. It hit a cool 1,320 crore rupees. What's the story there? What happened?
Well, it was mainly driven by higher margins in their conductor business and also increased cable volume.
Makes sense.
But here's the thing. While that's impressive, their Q1 FY24 margins, they actually took a bit of a hit.
Oh, really?
Due to some external factors, which we'll get into later. For now, just keep in mind that even with a strong overall trend, there can be some volatility.
Okay, so basically steady as she goes, but keep an eye out for bumps in the road. All right, let's zoom out a little bit and look at Apar's operating dynamics, the big picture. One thing that jumps out at me is their global reach. Exports make up over half the revenue, and they're mostly dealing with developed countries. That's pretty bold, isn't it?
It is. And they're not just testing the waters, they're making serious moves in the global market. Their expansion into the U.S. market, that's a big deal.
Yeah.
The U.S. wires and cables market, it's huge. It's 4 to 5 times bigger than India's. So there's a lot of potential there. And back home, they're holding their own with a 50% market share in the reconductoring solutions market in India.
Okay, so they're playing on a global field and holding their own domestically. But here's where I think it gets really interesting. Apar's not just involved in one part of the energy sector. They're offering products across the whole thing, generation, transmission, and distribution.
Right.
It's they're setting themselves up to be a one-stop shop for all your energy infrastructure needs.
That's a really sharp observation. And it puts them in a great spot to ride the wave of those huge investments we're seeing in renewable power generation and grid infrastructure, especially with India's big climate commitment.
Right. Now, before we move on to valuation, let's take a quick peek at their cash flow and debt situation. Before their recent QIP, their gearing ratio was super low, just 0.10 in FY24. That seems like a pretty healthy financial situation, wouldn't you say?
Oh, absolutely. That low gearing ratio means they were managing their debt really well. And as for the QIP, well, they raised a good chunk of change, like ours 1,000 crore, by issuing almost 1.9 million equity shares at a premium. And get this, they've used a big part of that, about ours 982 crore, for working capital needs.
So what do you make of that? Are they stockpiling cash, or are they getting ready for something big?
Could be a sign that they're preparing for some serious expansion and growth.
Okay, so they've got a solid financial foundation, and they might be getting ready for even more growth. And it looks like they're riding some pretty strong industry tailwinds, too. Their focus on renewable energy, it lines up perfectly with that global push for clean energy. And with India's ambitious climate goals, there's got to be tons of opportunity there.
You're absolutely right. Those climate goals mean big investments, which create huge opportunities for companies like Apar. And it's not just renewables. Their telecom cable business is also set to benefit from the increasing demand for data and, the rollout of 5G.
Right. So they've got a lot going for them in terms of fundamentals and the industries they're in. But how does that actually translate to their valuation? I guess it's time to shift gears and look at that checklist.
Let's do it. Let's see how their fundamentals stack up against their valuation. All right, so we're back and we're diving into Apar Industries valuation. And one of the first things we always check is the PEG ratio. It's a way to see if the company's price is in line with its growth potential. Ideally, you want a PEG ratio below 1.5.
So did we find that magic number, that PEG ratio, in all the documents we have?
Well, no, not specifically. The sources didn't give us an exact PEG ratio,
Oh, okay.
but that doesn't mean you can't figure it out yourself.
Right.
You can take publicly available data, combine it with the financials we've talked about, and do the calculation. The important thing is to think about how Apar's growth plans, things
Right.
like that big expansion project at Katawada and their growing exports, how that's going to affect their future earnings. That all plays a role in determining that PEG ratio.
All right, so homework assignment for our listeners.
Yeah.
Got it. Now, what about valuation flexibility? I noticed that Apar is pretty diversified. They're working across 7 different business segments, and they're even getting into the business-to-consumer market with those Anushakti house wires.
Right.
Does that give them more, wiggle room with their valuation?
Yeah, absolutely. Having a bunch of different ways to grow and also to manage risk, that's a good thing. If one segment isn't doing so well, the others can kind of balance it out.
Right.
So this diversification makes them more appealing to investors, which can lead to, a higher valuation overall.
That's a good point. So good news for potential investors. Let's talk growth confidence for a minute. Apar has snagged some pretty impressive contracts, like that massive one from the Central Organization of Railway Electrification. Plus, they've got this reputation for delivering high-quality products. Does that make you feel confident about their future growth?
It definitely looks good on paper. Delivering consistently and winning those big contracts, that gives investors confidence, in their ability to keep growing.
Yeah, makes sense.
But you always got to look at both sides of the coin.
So what's the flip side here? Are there any red flags when it comes to their growth?
Well, in the FY24 document, they do mention some potential risks, things like global inflation, which could increase their costs, and geopolitical instability, which, can make things unpredictable in the markets. Oh, and we can't forget about potential changes in what customers want, because of things like the European Carbon Border Adjustment Mechanism that could affect their exports to Europe.
Right, of course, external factors. Even the best plans can get derailed by stuff like that.
Exactly. It's all about weighing the potential rewards against the risks.
Okay, so we've got a pretty good understanding of their fundamentals and valuation, but, the numbers don't always tell the whole story. What about the people in charge? Are they trustworthy? What's their track record like? Let's dig into that management checklist and see what we can find.
You got it. A company's leadership can make or break it, that's for sure. So let's take a closer look at the team running Apar Industries.
All right, so we've dug deep into the financials and valuation of Apar Industries. But let's face it, sometimes the numbers only tell part of the story.
Right.
It's the people at the helm, the management team, that can really make or break a company. So what's the verdict? Can we trust these folks?
Well, if we look at what they're saying, in the annual reports and those earnings calls, there's a consistent message about sustainability and ethical practices.
Yeah, I noticed that too.
But it seems like they're actually putting their money where their mouth is.
Oh, okay. So give me some examples. How are they putting these values into action?
Well, they're actively trying to reduce their carbon footprint. They're engaging with their suppliers on ESG issues, and they've gotten a really good CDP score.
Oh, wow.
Which, it indicates a real commitment to sustainability, and that's a big deal for a lot of investors these days.
Yeah, you're right. It's not just a bonus anymore. It's something investors are really paying attention to.
Definitely.
But beyond those initiatives, what other evidence do we have that they're walking the walk ethically? Are they being transparent?
Yeah, the FY24 document actually gives us some pretty good insights there. They've given a lot of detail about the board composition, how their committees are structured, and how they adhere to all these corporate governance principles.
Okay.
And this level of transparency, it suggests that they're willing to be held accountable, which is a good sign.
Transparency and accountability, 2 key ingredients for building trust. Exactly. And speaking of transparency, I remember how they handled that whole trade restriction issue during their Q1 FY25 earnings call. They didn't try to, sweep it under the rug.
Yeah, they were very upfront about the challenges and the impact it had on their conductor business. That kind of honesty, it builds credibility with investors.
Okay, so they're talking the talk and walking the walk when it comes to ethics and transparency. But can they actually deliver? Have they faced tough situations in the past?
Well, Apar Industries has been around for a while, since 1958. So they've seen it all, economic ups and downs, changes in the industry. They've managed to survive and adapt, which says a lot about their ability to stay ahead of the curve.
Experience counts for a lot. But what about more recent examples of their, strategic decision-making? Are they making smart moves for the future?
Well, their investments in expanding their capacity, like that greenfield project at Katawada, that shows they're thinking ahead and planning for growth. And they're diversifying their portfolio, going into new markets, developing new products. These are all signs of a company that's not just sitting back and relaxing.
They seem to be doing everything right. But even with a great management team, there are always potential concerns.
Yeah.
Are there any red flags we should be aware of when it comes to Apar's leadership?
The FY23 document did mention some legal matters they've been involved in.
Oh, okay.
Now, these litigations don't necessarily mean they did anything wrong, but it's definitely something investors should look into.
Good point. Always better to be safe than sorry. Well, we've covered a lot in this deep dive. We've looked at Apar Industries from all angles: their financials, their valuation, their management team, and their place in the industries they operate in. So, what's the final verdict?
Apar Industries, overall, they present a pretty compelling picture. They've got strong fundamentals, they seem to be in a good position for growth, and their management team seems competent and ethical. But, like with any investment, there are risks to consider.
Right. There are never any guarantees. But we've given you the information you need to make an informed decision.
Exactly.
Now it's up to you to weigh the pros and cons and see if Apar Industries fits your investment goals and your risk tolerance.
That's what we do here at the Deep Dive. We give you the information, you make the decisions.
Well, that's all the time we have for today. Thanks for joining us on this deep dive into the world of Apar Industries. We hope you learned something new, and we hope you'll join us again for our next deep dive adventure.